Welcome to the Virtual CPA Success Show for creative agencies, the go-to resource for agency owners looking to scale their business. Join us every week to stay ahead of the curve and position your agency for future success.
Hello, everybody. Welcome to today's episode. I am very excited for today's guest. Anyone that is familiar with agencies or marketing has definitely heard of today's guest, David C. Baker. And I'm also excited because we get to talk about finance with someone who is not a CPA. So welcome to the show, David, and go ahead and introduce yourself. Give us a little bit of your background.
Thank you. So owned an agency for 5 years, been advising agencies for 29 years. It seems like a long time. Worked with 1,000 firms individually, like in a consulting way, and then thousands of others have been through different seminars and so on, written 6 books for the field. And I do the advisory side. Jonathan does the M&A side. There's just 2 of us. There's your brief introduction.
That's everything everybody needs to know.
And you got, of course, your newest book, the one that we've just recently read, Secret Trademarks of Elite Advisors. Excellent read, very, very easy to read, and a lot of common sense stuff in there that you just kind of you pulled out. And I think that if you're an advisor, you definitely need to read it. It's must read. We bought it for our entire team and got some great feedback from the folks that.
Oh, thank you. Yeah, I had a fun time writing it. I'm leaving on Thursday to try to write a novel, which is a really stupid thing to do. I have no idea how to do that. I know how to write business books, but I want to try something different. So we'll see.
Oh, well, good luck on that. I know.
It'll be the first novel with bullet points everywhere.
And pictures all over the place.
I just hope you don't have a character in it named Jody Grunding, because that would just be terrible.
Yeah.
It'd be okay if you did. I'd be cool with that. I'll be the villain too if you want.
Great. So let's jump into your background on the finance side a little bit. So like I said, you have a nice book about finance for marketing and accounting for marketing. And like I said, you don't really have that accounting background. So I am curious kind of what made you write that book and what's the audience? How's the audience response been?
I felt a desperate need to write that book because I felt for a long time that success in this field, you can't really draw a straight line between a successful firm and a really creative firm. It's often the creative side is way more than the client would notice, and it's unpaid for the last little bits that you're doing to improve it. But there is a direct connection between success in this field and your financial performance and knowing it, understanding it. So I thought, well, maybe I'm not a CPA, but maybe I could write this in a way that non-accounting people would really appreciate. And I didn't set out to write the book. It's called Financial Management of a Marketing Firm. The second edition just came out a few months ago. But I just wrote a bunch of articles, like one, how to collect money people owe you, or how to read a balance sheet, whatever. And then at the end of all that, I thought, oh, this should probably be a book. And so I sent it to an editor and I said, turn all these articles into a book and tell me what's missing. And then I wrote those 3 or 4 chapters, and then it came out. So it was really an attempt to help people who aren't from an accounting background understand finance, because I'm sure you've realized this because you've got 100 clients in this space as your clients, 100 agencies. What is this balance sheet of which you speak? It's sort of like, well, how far do I go? How far back do I go to explain that stuff?
Mm-hmm. Yeah, it's pretty amazing how folks have been so successful in not really understanding the true reason their businesses actually generate revenue, the reasons how they generate income, success. I think a lot of folks just got lucky and priced it properly, and kind of built their practice, and because of that, they think, oh, I'm doing well, I don't need your help. Because look at the way that my finances are running. How do you address those folks, or am I right, or could I be completely off base on that?
No, I think you're right. One of the things I do is I try to set standards for this and say, okay, your profitability ought to be this. That's part A. Part B is, oh, and you can't underpay yourself in order to achieve that profitability, right? So we got to build these 2 things together. And then if that isn't the case, then how are we going to fix that, right? And it is kind of surprising. I still have some clients, although it's not nearly as prevalent as it used to be, where they've got an 80-year-old CPA in New York who does everything on a cash basis, no accrual basis. The statements are every quarter, and they refuse to follow industry practices, right? And the firm still makes a lot of money. It just sort of, yeah. And then you've got other people that are using they're using Great Plains or NetSuite or some overkill product, and they've got everything figured out, including all their cost accounting, and they've got 7% profitability every year. They're not making much money, but they know where everything is. It's just so weird to see all these different contrasts.
What do you think the big difference is?
I think it comes from aptitude for entrepreneurial risk.
Mm-hmm.
Some people really view their business in the creative field as, it's sort of like Norm, when he got a job at a brewery from Cheers, Norm from Cheers.
Yep.
And they hand him a paycheck after the first 2 weeks, and he looks at it and says, "What's this? I didn't know I was getting a paycheck," and he's hugging the vats every morning. I think some creative folks are just so thrilled to find clients who pay them for something that their expectations are lower, right? Whereas the really successful ones view themselves as a professional service. They're an architect, an engineer, a CPA, a lawyer, or somebody in the creative field, and they don't feel like they have to make a compromise in terms of how much money they make.
Yeah, and I think it's been fun to see companies go through that business maturity. Like you said, when you're first doing your thing, you're like, oh wow, people are paying me for this, and this is fun. This is what I've always wanted to do. And then by the time we first meet with them, and then 2 years later, you can see the questions they're asking, how well they understand their business and all these parts of it. So you want to kind of talk about that path from that point where you're point A, you're like, I just love what I do, to point kind of C, D, or Z, or whatever it is, where you're like, oh wow, I really understand my business.
Mm-hmm. Yeah. And I try to come up with ways that help them in a very simplistic way figure out where they are. So I wrote an article recently about, if you want one single metric to figure out how your firm is doing, here are the 8 options, and here are the pros and cons of each. And then I landed on one, and I said, listen, here's the simplest one: your fee billings per full-time equivalent employee. And 85% of firms are stuck in that 150 to 160 range. And once they see that they're stuck there and how to improve that, all of a sudden the light comes on, and they think about their business very differently. I think finance needs to be viewed as a way to tell a story, an interesting story that you can shape by doing things differently.
It's kind of funny you mentioned that, because when we bring a client on, the first thing we do is we put together a really in-depth forecasting model for them. And it's not one of those deals where you just set at the beginning of the year and you look at the end of the year and say, how did I do compared to that mystical number that I made up 12 months ago. It's one of those very robust things. It's very dynamic. Every month we're changing it based on what life is and what life happens to them. And the key is, it's not just simply saying, hey, we're going to increase our revenue by 10% or 15%, or we're going to miraculously increase our bottom line by, to 25 or 30% where we should be. It's really breaking it down to the non-financials, right? Hey, how many, what do we have to do? How many people do we have to have? What's our billable rate? All the different non-financial metrics that they actually have control over, to be able to make those decisions. And a lot of folks are like, wow, no one's ever brought it or broken it down that simple for me to understand that I just can't miraculously hit a goal by saying, by labeling, hey, we're going to hit that 10% number. And it's kind of funny how many folks, actually achieve or nearly achieve those numbers when they have that financial plan and forecast put in front of them. And I'm assuming that's kind of where you're getting at with that, is that you really can't just simply, it's got to be based on, you got to break it down to the non-financials, I guess, is the big key.
Right. And somebody at the firm here, I'm assuming there's more than one partner, but at least one of the partners has to think that one of their primary jobs is to understand and impact the financial performance of the firm. I mean, that's job one. That's even more important than culture. It's more important than new business. And once you get that done, and you may need outside help with that, obviously, then you can move on to these other things. But if the firm isn't performing, it doesn't matter how good your new business plan is. You won't need one.
No, I think the interesting thing, you mentioned that one metric, and I think that for our listeners, what I like what you said there is that finance is about storytelling. And so that's what I'm trying to train my CFOs and our team on all the time is when you're sitting into a financial statement meeting, you need to be able to tell someone what the story of this month was. And it's not, you don't want to be boring with it. You want to say, this is what happened this month, and this is how next month can be better. So I think I work with financial professionals on telling that story, but if I'm listening to this and I'm a small firm and I can't really afford a financial professional, how would I go about looking for that story each month of the financials or each quarter, or how often I should do it?
The first piece of advice I'd give somebody listening in those shoes would be to figure out how you process information and then adapt it to a way that makes sense to you so that you can get excited about it, right? Like, and everybody has a really weird way to do that. Like mine is sort of a macabre way. I just think months to live. So I add up what's in the bank, what's in savings, what's in accounts receivable, divide that by what my monthly nut is. And I said, okay, I got 9 months to live, 11 months to live. And then I just track that, right? So as long as it's basically on track, come up with something that works for you and then make this a part of how you think all the time, right? Mm-hmm. And report on it. Employees don't care that much about financial performance of your firm unless it isn't there. Then they start caring. Mm-hmm. But you have to care about it, right? And you've got to see far ahead because you've got to make really tough decisions. And in this industry, those tough decisions are almost always about people. They're not about facility or contractors because most of your expenses are with people, and those are really painful to make.
Yeah, I like how you did that. You basically gave them, hey, here's the formula, and just make sure that you're looking at that formula every single month over month. And that's your formula. That's your one nut. And if there's something wrong with that, then of course you need to look digging deeper and figure it out. But as long as that formula as long as that percentage stays within the same ballpark, we're smooth sailing. So you made a fairly simple process for, I think, people to understand, especially business owners that really don't understand the finances, that they have a general idea or general understanding.
Hey, when somebody comes to you guys, do they already know they're pretty sophisticated, they just don't have the time to do it? Or are they unsophisticated and need to get an education when they come to you?
I'd say more or less probably in the second group. I'd say a lot of times they're kind of like you said, they're sophisticated in one or two areas, or they really understand one or two things, but they don't understand the big picture. And so kind of what Jody was talking about there is if that one or two thing is going in the wrong direction, they don't necessarily know how to dig into it and how to fix it, right? So they're like, oh yeah, my months to zero is down to 3. Now it's 2. I don't know how to fix it. I don't know how to change it. And that's a lot of time where they come to us so we can add a little bit more sophistication into it instead of just that basic finance knowledge.
Right.
And I would also add to that they come to us at different degrees of time. It may be that we're down to 1 month.
Yeah.
And please help. Or maybe that that's 12 months away, and they just want somebody to get a better understand, take ownership of it. So I think it varies dramatically on when they come to us. But no matter if it's 12 months or 1 month, it seems like we're either the savior or we're the issue, right?
Right. Yeah. And or they just met with their financial planner and they realized, oh, we're going to need a little more money in order to be able to retire at 83. Let's fix this now.
Mm-hmm. Yeah. How do you as an advisor, I mean, and I really respect you in a way that you're very straightforward. You tell how it is. You don't sugarcoat anything. And I think that's super important for a lot of business owners. And so, and with that though, how do you prevent yourself to be looked at as the bad guy versus the good guy? Or don't you really even care about that? Does it make any difference to you at all how you're perceived amongst those folks? And then in the same respect, kind of piggybacking off my conversation or my point earlier is that how do you the advice that you give or the direction that you give a client, how do you prevent them from saying, oh, you're the reason why we're at the place we are, whether that's good or bad?
Right. Yeah. I wish I cared more, honestly. It probably would be better, but I am bound to avoiding malpractice. And so as much as I hate it when a client is disappointed in me, I cannot live with myself if I am not having a candid, honest, transparent conversation with them. And so my pledge to them is not to be right, because I don't know how to deliver on that. My pledge to them is to always be honest with them, and they'll have to decide whether I'm right or not. I'm Kramer and Seinfeld. Like, all babies are not cute, and I don't mind saying it. Like, I'm not going to tell the recent mother, that her baby isn't cute, but outside of her earshot, I'm going to be honest about it. So it's a different style, but it's also why I'm not a coach. I would make a terrible coach. And so whenever somebody comes to me and that's what they're looking for, I always refer them to somebody else, because I'm not somebody that's going to gently encourage you and just check in about whether you've done that. It's like, no, just get off your ass and do it. Like, that's more my style. And it's not the perfect style, but it is what it is. It's just what I have to live with.
Yeah, I know that. I think the interesting thing about that, we just had a client call the other day, and I was just kind of talking with them, and they told us in some aspect that they wish they had a little more, that they wish that, that we would come in and be like, this is exactly what it is, and this is why it's this way, and then be a little hard line, because sometimes we try to be somewhat adaptable, kind of like you said with the clients. Like, sometimes a number resonates with them a little bit more than another number, so we'll be adaptable and be, okay, let's talk about this number. But the thing that sometimes is missed is like the relationship between those two numbers is, yeah, you may want to be talking about revenue per producer, and we want to be talking about effective rate. But at the end of the day, there is a similarity between those two numbers, and it's understanding those two numbers and how they relate to each other. And I think that's where a finance professional comes in.
Yeah, absolutely. And it's like, what kind of a relationship do you want with your doctor? Do you want the truth? Yes.
Right.
Do you want them to be kind and empathetic? Yes. Right. But there can be a kind ruthlessness. That's what Blair Enns, my podcast partner, talks about all the time. And that's sort of the approach. I've always been ruthless, but more recently I've been kind too. So I think it's probably an improvement in my bedside manner. I'm no longer Simon Cowell.
Hopefully you're not Randy and you're like not singing to your clients.
Yeah, right.
Great. So let's talk a little bit more about these, because I think what I really like about your books and the way you talk is something that I've always told in every level of my career, whether I was at Frontier, which is a large organization, or here at Summit, is I've always told people I talk to is let's try to simplify finance, right? Like, if someone came into me when I was at Frontier and was trying to explain this complex hedging accounting, first thing I'd say is like, whoa, slow down. Let's explain this to me like I'm my 13-year-old daughter. Let's not explain this to me like I'm a CPA. And so, like, can you talk about some more of those metrics that you feel are pretty simple, but also things that marketing professionals should be keeping an eye on?
Yeah, sure. So fee billings per full-time equivalent. Most firms are at 150 to 160. I think they ought to be at 220. Client concentration is a big one. So any single client shouldn't represent more than, my standard is 25%. A lot of you folks are more conservative than I am, and you'd say maybe 10 or 15%. Another would be how thick should your cash cushion be? I want that to be, personally, I want it to be 6, 8, 9 months, but it would never be less than 2 or 3 months. That would be another one. Utilization. So individuals would bill up to 85% of their time. If they're sort of like, using football terms, they're role players, skill players. And then the role players like AMs and PMs would be lower, and so on. But 60% of the group as a whole should be captured. Let me think. Are there some other ones? Oh, profitability, always aiming for 20%, but after indexing principal comp. And there's numbers for that as well. We index that based on how big the firm is. And then we assume that after a certain point, the rest of the money should come from distributions. Leverage, we don't ever want somebody to owe more than 60 cents for every dollar of asset they have. Those kinds of things. Those are the big ones, I think.
No, I think that's very similar to a lot of stuff we talk about. So that's good. And I obviously have read your books and used it in some of my consulting. I do have one question, because I know it's a question I get almost every time when we talk about concentration, client concentration. So if I'm working with Facebook and I'm working with 3 different departments of Facebook, is each department its own, or do I have to count Facebook as one?
Facebook is one, absolutely, because you're not going to lose Facebook because you screw up. You'll go out of your way to be really good to them. You'll lose Facebook because they're purchased, which of course is not going to happen with Facebook. Or more likely, there's what's called a vendor review. So a new CFO comes in, says, what the heck? We've got 78 agencies. We got to slim this list down. And you'll have no control over that process. They'll slim it down to 13, which is the average, and you'll either be in or you'll be out. So yeah, it's all the same.
Right. Yeah, like I said, I know that question comes up to me all the time. I don't know about you, Jody.
Oh, all the time. Yeah. And they would disagree with you like just about 90% of the time.
Right.
When you tell them that, which is funny. I guess the question piggybacking off of that one, when someone does say that and say, well, how do I get, what do you mean to do? Let go of those clients? And my response is no, we just need to up our marketing and look for additional Facebooks out there to kind of minimize that risk. Is that kind of your idea
exactly.
as well? Or?
Yeah. This is America. We don't turn down opportunity. So yeah, right. You would definitely take it and look for others. And then sometimes you might impose what I think of as a guerrilla tax without them knowing it. So you pull a percentage off everything they pay and set it aside a little bit because you are going to lose them. It's just a matter of when. And when you lose them, you want to have a thick cushion. You want to act quickly with terms of staffing and so on. But yeah, I give the same advice you do.
Okay. Yeah. Because we tell them, instead of pulling it away, we tell them to have about 10% of your annualized revenue in the bank. And if you've got a Facebook in the world, then maybe it's 15%. And it's for that reason alone. In the event that they are to disappear, you're going to need a little time to readjust your team and really kind of figure out how to get that new person or new company if you haven't already done so.
Right.
And then the more fun part is making Facebook smaller, right? Like, okay, let's grow our revenues because Facebook's only 10%, so we can keep having this conversation. That's the more fun part, right?
Well, sometimes that kind of promotes an M&A movement where they buy another firm that also has a big client concentration. Then there's no applied penalty for either the buyer or the seller. Sometimes that's a way to solve it too.
Yeah, great. All right, so we're gonna shift gears here a little bit to a little bit of extra activity here. So you've mentioned a couple or several TV shows in this podcast. So I'm guessing that you're a TV watcher. So I'm gonna ask the question a little bit differently. So one of my favorite podcasts is The Rewatchables. It's a podcast about movies that you can watch over and over again and never get tired of. So I'm gonna turn that on a TV shift. Like, what TV show can you watch over and over again and never get tired of it? If the episode's on, you're just gonna leave that show on. You're gonna let that episode run, even if you've seen it 30 times. So both you guys are thinking. So I think David's gonna come up with the answer a little bit quicker because he's already mentioned a couple shows. So let's start with you, David.
It would probably have to be Seinfeld. I just find the humor to be timeless on there. It'd have to be Seinfeld for me. Yeah, which is gives away the age, right? Somebody else is going to say Friends, or Jody's going to say Archie Bunker or something.
So okay, so I'm gonna send a follow-up question here, just because Seinfeld's my answer too, and I don't want to be boring. So, do you have a favorite Seinfeld episode that you could think off the top of your head?
Oh yeah. It's where Jerry says, George comes running out of the bathroom with his pants around his ankles, and he falls on the floor in front of him because Vandelay Industries calls.
Oh.
And Jerry says, "And you want to be my latex salesman," while he's on the floor with his pants around his ankles. It's the funniest episode. Yeah.
That's a good one. Yeah. Mine always, when I always think back on, is the one where George is trying to change his nickname. He keeps ordering T-bones at the dinner, and he's out there arguing, and he's like, he looks like that Coco the monkey, and that's his nickname. That's definitely my favorite episode.
That's a great one. Yeah, I remember that one.
All right, Jody, what's your rewatchable TV show?
Oh, dude, that's a tough one because I don't watch a lot of the sitcoms like that at all. But I will tell you, movie wise, the one that comes up that I will rewatch. I will, if I'm scanning through and I see it, no matter where it's at in the movie, I rewatch it. And it's kind of funny that it's named The Accountant, but it's The Accountant.
Right. Yeah.
I just love that movie. And I don't know why exactly I love it, but I love it. And the other one would be Miracle. Every time that one comes up, I'm rewatching that one over and over. I've probably seen that one 100 times pretty easily. And it's just that underdog feeling and overcoming all those circumstances and the brilliance of a coach. Uniting a team of not necessarily misfits, but of really talented people, and to overcome a huge obstacle. So those are the two big ones that I would say that I rewatch all the time.
Yeah, the hard part about Miracle is it's like 5 hours long. So it's like if you're like in the beginning of it, you're like, oh, I'm in for the next like 4.5 hours here watching this movie. But I do love that movie. Okay, so we're kind of getting into the end here. So what we'd love to do at the end of our episodes is make sure our listeners have one final thought. So if they've made it to this far in the episode, what is one thing they should walk away from this podcast with? So let's start with you, David.
Money is not scary. Just tackle it. You'll figure it out. Simplify it. Don't be terrified of it, because then you avoid it because you're not sure what to do with it, right? It's not terrifying. It's fun.
It is fun. All right, Jody.
Yeah, I'm going to add to that. And one thing that my partner, Adam, over and over says, he says that money's not evil. A lot of folks, when we get into the industry, they're looking at, well, hey, why would I want to be that profitable? This is more of a lifestyle thing. And it's one of those deals that any solid business is only a lifestyle if it's profitable and successful and building cash and protecting the folks that are on the team because they have that cash and because they have that stewardship. And so I would say, to add to that, I'd say, building a solid cash cushion is super important to any successful business and to any marketing firm out there. And in doing that, you've got to have a solid bottom line, which I know, David, you're big in, and you help folks achieve that through many different ways. And so I would say if they don't have somebody like yourself on the team, they really need to have a David C. Baker helping out to right the ship.
Yeah, no, I think my takeaway is something you said early on, and I think it's actually pretty similar to yours, David. It's you have to start somewhere, right? Like if finance is intimidating to you, find one place to look, find one thing that resonates with you, and be consistent in looking at it. And then when that number or that concept is changing, that might be where you have to call for help. But you have to have that one thing that really makes sense to you when it comes to finance, and dive into it and just start there. If you start there, you're going to find out that this stuff isn't as complicated as you think it is. I mean, if Jody can do it, I think anyone can do it. So that's one.
I agree.
That's another concept to think about when it comes to this stuff. So awesome. Well, I think this has been a great episode. I know I took a lot of notes and thought a lot of stuff about what you said, but David, where can people find you and how do they get hold of you?
So we're changing the company name, and it's already redirected, so they can go to punctuation.com.
Oh.
And my email address is david@punctuation.com. And everything is there. There's like 2 million words of free stuff too. Anybody wants to sign up for the free weekly emails, feel free. Love to have you.
And you also have a podcast that everybody's always talking about. So you want to
plug
that a little bit as well?
Two Bobs. It's me and somebody else. twobobs.com.
Awesome.
I love the name, by the way.
Thank you. Yeah. From Office Space, right?
Yep.
It tells you what you're getting into coming into the podcast. So that's helpful. Awesome. Well, yeah, I definitely appreciate both you guys being on the show. And like I said, we'll probably have to have you on again to talk about some of your other books as well, David. So appreciate the time.
Thank you. Take care.
Thank you.
Enjoy this podcast? Visit our website, summitcpa.net, to get more tips and strategy for achieving business success. We're here to be a resource in this ever-changing industry.